Okay, so hello, my dear students. Welcome in the continuation of our discussion for foreign currency transactions or accounting for foreign currency transactions. So in this video, we shall be discussing some illustrations, no, on how to record foreign currency transactions. Okay, so to illustrate an importing transaction or an exposed liability. No? So, assume that on November 1, 2014, one firm ordered 1,000 units of inventory from a US firm for 20,000 US dollars. So, the inventory was shipped and invoiced to the Philippine firm on December 1, 2014 to be paid on March 1, 2015. So the firm's fiscal year end is December 31. So assume further that the Philippines did not engage in any form of hedging activity. Okay, so in this case, no, so yung three relevant dates natin is actually December 1, 2014 being the transaction date. It's not November 1, 2014 kasi date pa lang yan pag-place ng order. So, yung transaction date natin is December 1, 2014. No? So, the date when the inventory was shipped and invoiced to the Philippine firm. Okay? And then, the settlement date natin is March 31, 2015. Yeah, since we are to prepare financial statements on the firm's fiscal year end, which is actually December 31. So we have a balance sheet date no, at December 31. Okay. So we have here the relevant buying spot rates and selling spot rates. No. The direct buying spot rates and selling spot rates. So since into importing transaction, no? So the Philippine firm is actually the buying firm, and then the U.S. firm is actually the selling firm, diba? Yung selling firm. Okay, so since the transaction is denominated in foreign currency, or it's actually the currency of the selling firm. Okay, so we're use selling spot rates. Okay, so selling spot ang gamitin natin. No? So on December 1, 2040, which is actually the date, the transaction date. So this is the time where I'll record the initially record transaction. Okay, so since the selling spot rate on December 1, 2014 is 40.55. So we'll record transaction by debiting purchases, credit accounts payable, or debit inventory, credit accounts payable for 811,000. That's actually the number of foreign currency, which is actually 20,000 US dollars, i-multiply mo with the direct exchange rate of 40.55. Okay, so again, initially, i-record natin yung transaction at the historical rate or yung spot rate at the transaction date. Okay? So, on December 31, 2014, no, since we will prepare financial statements, no, so we need to adjust. No, so, since we do have monetary item, which is accounts payable, no, so we need to adjust the value of our accounts payable. No, so, and since we adjust the value for accounts payable, nag-defer yung exchange rate from the transaction date, which is actually 40.55, and then yung closing rate or yung spot rate at the balance sheet date which is 40.80 since nag-increase siya, no? So nag-increase siya, so pag mag-increase yung direct exchange rate and then yung we have exposed liability, so we actually have loss. So that's actually we have loss of 5,000. That's actually the difference of the exchange rate is 40.8 and less 40.55 times the number of foreign currency. So since the increase is actually a loss. Or yung accounts payable natin, di ba, being a monetary item should be revalued at December 31, di ba? So it should be revalued at 20,000 times 40.8, the closing rate. That's actually 816,000. And then, yung accounts payable natin at December 1, at the transaction date is actually 811,000. So, nag-increase siya ng 5,000. So, pag mag-increase ang payable natin, that's actually a loss. So we'll debit foreign currency transaction loss for the accounts payable for 5,000. Okay? Yan siya. So, on March 1, 2015, diba? On December 31 muna, and we prepare financial statements, no? So sa income statement natin, represent yung foreign currency transaction loss. Okay? Foreign currency transaction loss at 5,000. Okay? Sa balance sheet naman, so if in case the inventory is still no, in the hands or in the possession of the Philippine firm, hindi pa siya nabenta. So, yung cost niya is actually 811,000. Yung historical cost niya. No? Actually, 811,000. Then yung accounts payable natin, since i-revalue natin siya, no? Based on our entry here, i-revalue natin siya. So, therefore, the balance niya at December 31 balance sheet is actually 816,000. Okay? So, on March 1, the settlement date, so you have noticed that yung selling spot rate natin is nagbaba. Okay? Nagbaba yung selling spot rate natin. That means, so if we do have exposed liability, then yung selling spot rate is nagbaba. As actually, we do have gain, diba? May gain tayo dyan. Okay, so yung gain natin is actually 40.8 less 40.65 times the number of foreign currency. It's actually 3,000. Okay? So yung entry natin for that is actually i-debit lang natin yung accounts payable natin. 816,000 is actually the last, the balance on December 31. No? 816,000. And we'll credit the foreign currency transaction rate at 3,000. And of course, yung difference, yung cash natin, diba? Nababayaran natin is actually based on the actual rate. Actual rate. It's actually 20,000 times 40.65. It's actually 813,000. So, since nagbaba yung nagbaba ang their exchange rate, we have lesser pesos na bayaran. Okay, that's why we have a gain. Okay? So, we have here our next illustration. It's actually an exporting transaction, no? Or an exposed asset. Okay, so assuming that on November 1, 2014, a Philippine firm received an order for 100 units of inventory for 50,000 to a U.S. firm. Okay, so the Philippine firm shipped the inventory and billed the U.S. firm on December 1, 2014. So the Philippine firm received the customer's remittance in full on March 1, 2015. So the firm's fiscal year ended December 31. Okay, assume further that the Philippines does not engage in any form of hedging activity. Okay, so same kanina, no? Yung three relevant dates natin still December 1, 2014, no? The date it was shipped, no? And the Philippine firm were billed, no? And we also have the balance sheet date, December 31, and then yung settlement date natin is March 1. Okay? So yung November 1, 2014 is actually yung date lang pag-place ng order. Okay? So since we are into exporting transaction, no? So we export, we are actually, the Philippine firm is actually the seller, no? And then the US firm is actually the buyer, no? Since it will be paid in their currency, so we'll use buying spot rate. Okay, so the Philippine firm would prepare the following journal entry, no, on December 1, 2014, no, the transaction date. So since on December 1, 2014, the buying spot rate is 40 pesos. Okay, the 40 pesos. So ang pag-record natin sa debit accounts receivable credit sales is actually 50,000 times 40 pesos. No, so that's actually 2 million. So we'll record AR, credit sales for 2 million. Again, that's actually 50,000 US dollars times 40 pesos na direct exchange rate at December 1, 2014, the transaction date. Okay. So, on December 31, no, at our balance sheet date, so you take note that nag-increase yung direct exchange rate. So if we do have exposed asset and then nag-increase yung rate, no, the exchange rate natin will have a gain, diba? So we'll have a gain. So the gain is actually the difference between the closing rate, which is 40.7 less 40, it's actually 0.70 times 50,000 will have 35,000. So you'll debit accounts receivable, credit foreign currency transaction, gain at 35,000. Okay? Kasi nga, at December 31, 2014, the accounts receivable should be revalued, no? To 2,035,000. Because actually, 50,000 na number of foreign currency, which is US dollars, times the closing rate of actually 40.7. So that's 2,035,000 versus the accounts receivable at December 1. The transaction date is actually 2 million. So, nag-increase, So, pag mag-increase yung direct exchange rate, mag-increase din yung asset natin, which is accounts receivable. So, which is actually a gain din, So, yung adjustment natin is 35,000. Okay? So, on December 31, and on March 1, 2015, so March 1, 2015, okay, so we'll record na the settlement, which is actually based on the actual rate at the settlement date, which is actually 4.6. So you take note that nag-change yung direct exchange rate, nag-decrease siya. So nag-decrease. So since nag-decrease yung direct exchange rate and we do have an exposed asset, therefore we have a foreign currency transaction loss. Okay? So yung loss natin is actually the difference, So we have 40.7 less 40.6. That's actually 0.10 times 50,000. We do have foreign currency transaction loss of 5,000. Okay? Or there's actually a difference between yung na-receive natin, which is actually 50,000 times 40.6. That's 2,030,000 versus yung accounts receivable balance natin, the 2,035,000 as of December 31, 2014. Okay? Yan siya. So, again, we do have a loss of 5,000. Okay? Next, we have a foreign debt transaction. So, just like purchase of commodities, foreign exchange gain or loss are also recognized in foreign debt borrowing grants. Okay, so also the purchase of goods might have been made through issuance of promissory notes and other debt instruments, so it will bear interest. Okay, so in this case, you will not be accounting lang for the exchange gain or losses in the principal amount, but also on the interest. Okay. So, if the domestic entity is a borrower, so pag borrower tayo, so lender, say, foreign firm, so it might use the selling spot. So, if, naman, tayo yung lender, the foreign firm yung borrower, so, we'll use buying spot, okay, for that. Yeah. So, you have an illustration here, So, Melrose issued a promissory note denominated in foreign currency for the purchase made from an Italian supplier. So the following were related transactions in Italy lire. So on December 1, 2016, Melrose Corporation purchased merchandise from an Italian supplier for 60-day 18% note for 108,000 Italy lire at a selling rate of 1 foreign currency to 74.2. That's actually on December 1. On December 31, the selling spot rate is 1 foreign currency to 74.85. Okay? And then on January 31, 2017, the selling spot rate is 1 foreign currency to 75.75. Okay? So to record this transaction, so we have here the selling spot rates on the following on the transaction date, balance sheet dates, and the settlement date. Okay, so the record transaction, so of course we'll debit purchases, credit notes payable. So based on the historical rate or yung spot rate at the transaction date. So, we'll have 100,000 times 74.2, no? That's actually 8,013,600. Okay? On December 31, 2016 naman, so, nag-increase, diba? No? Nag-increase ang direct exchange rate. And we do have notes payable, diba? We do have notes payable. So therefore, may transaction loss tayo. Kasi we have exposed liability and increase yung their exchange rate, so we have a loss. Or since kasi, pag-increase yung their exchange rate, pag-increase din yung note payable, diba? So that's why we have a loss. Okay, so the amount of our loss is actually the difference between the direct exchange rate at December 31, 2016 versus December 1, 2016. No? So that's just 74.85, that's 74.2. Then multiply na lang natin sa number of foreign currency, which is 108,000. So at December 31, 2016, we do have a 70,200 loss. Also, since both the principal and the interest will be paid on the settlement date, will account for the interest payable as of December 31, 2016. So we'll record interest expense, credit interest payable. No? So that's actually 118,000 times 18%, kasi 18% yung interest rate natin times 1/12 kasi it's 1 month pa lang. No? Then multiply mo sa closing rate, which is actually 74.85. So we do have interest expense of 121,257, no, translated in peso. Okay? Okay, so on December 31, no, so ito yung present natin sa financial statements natin. So sa income statement, of course, we'll record foreign currency transaction loss of 70,200 and an interest expense of 121,257. So sa balance sheet naman, of course, yung notes payable natin, sa security value natin siya, its value na is 8,083,800. It's actually 108,000 times the closing rate, which is 74.85. Okay? Yung interest payable din natin, that's actually 121,257. And then, yung inventory natin, as if the inventory is still in the possession of the firm, that's actually 8,013,600. Okay? So, on the settlement date, yan siya. So, ang total payment natin is actually the principal of 108,000 and the interest for 2 months. No? That's actually 111,240. And since the yung rate natin is 75.75, no? 75.75 yung the exchange rate on January 31, 2017. Therefore, the amount of payment is actually 8,426,430. Again, that includes the principal amount of 108,000 plus the interest of 2 months, no, which is 3,240. Since the multiply mo sa actual rate or the exchange rate at its settlement date, which is actually 75.75, yun nga, you'll pay 8,426,430. Okay? Of course, we'll debit notes payable, no, yung balance sa December 31. And then yung interest expense natin for 1 month, diba? Kasi nga yung interest natin for 2 months, and then for December 2016, and then for January 2017. Okay, so yung expense lang natin is for the 2017, yung 1 month sa 2017, and it's actually 108,000 times 18% times 1/12 times the direct exchange rate for 2017, which is 75.75. And then, we'll recognize the interest payable, debit natin at 121,257. Okay. Then, our foreign currency transaction loss, no? So, since yung exposed liability natin is actually the principal, which is 108,000 plus yung interest payable natin for 1 month on December 31, diba? Is actually 1,620, no? So sir, therefore, our total exposed liability, the interest payable and then the principal amounted to 109,620, no? I-multiply natin by the difference between the direct exchange rate at the settlement date or the actual rate, actual spot rate versus the balance sheet spot rate or the closing rate. No? So this is actually 75.75 less 74.85. Okay, so 109, 620, multiply mo sa difference between 75.75 less 74.85. Yes, since nag-increase yung direct exchange rate natin, nag-increase siya. Okay, di ba? Nag-increase siya, no? So, therefore, it's a loss. So, the amount of loss is actually 98,658. So, check lang the equality of your debits and credit is actually, the total debit and credit is actually 8,426,400. Okay, so that ends our discussion for accounting for foreign currency transactions, and thank you for listening.